Hey everyone, and welcome back to another Tesla weekly video for today. I hope you're having a wonderful weekend so far. Yes, we are back on the road for another month or so stick with me while we are in this digital background realm. Now in today's video, as always, we're going to try and keep it as short as possible. Some numbers out of China, out of Europe, some news related with regards to Tesla, X, and xAI. Yeah, that came out of nowhere. So let's discuss that a little bit in this video. Next week, two important things are going to happen. Probably one, April 2nd, tariff day, and then two, I think it's April 1st, maybe also April 2nd, but that's the production and delivery numbers for the quarter from Tesla. Of course, we know it's not going to be a pretty quarter. Well, thankfully, we have China that is pulling its weight. I think China Q1 is going to beat, well, Q1 of last year. We're actually beating Q1 of last year at the moment as well. Not by much. So depending on what the numbers were for the last couple of days, I think we could be beating that by a couple of thousand vehicles. So let's see. If you enjoy this type of videos, hit all the buttons. We'd really appreciate that. If you want to support me even further, do check out the link down in the description and hit the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. All right, so as you can see, last week, the Tesla weekly insurance number came in at 17,400. So we are continuing that trend since the launch of the new Model Y. And that's also much better than the same week last year, 13,200. Now, currently for the quarter, Q1, we're at 16,200 vehicles. Same period last year, we were at 15,900. Currently, we're beating that by 300 vehicles. And if we continue that trend here every single time, around 1,900 vehicles or so, if we can continue that trend, maybe, who knows, maybe last week, plus that extra day, March 31st, maybe we're going to get closer to 20,000. That number would be quite nice. We'll see. But currently, we are beating the number from Q1 2024, and that's with a Model Y refresh. Moving on to some select European countries, those make up around 60% of the sales in Europe. Now, of course, as we enter April, we will get the monthly numbers for big market. Well, it used to be big markets, Germany and France. Unfortunately, we did not grow much. Actually, we didn't grow at all. Week over week, still 3,900. These markets are UK, Norway, Netherlands, Sweden, Denmark, Italy, Spain, Switzerland, Czech Republic, and Iceland. So yeah, in Europe, we're definitely not doing well. Now, as we move into, well, the tariff deadline, you've probably seen this infographic on X or maybe on some other social media accounts or on Visual Capitalist on his website, where cars sold in America are made. It says here Tesla 100%, Ford 77%, and 21% Canada, Mexico, Stellantis 39% Canada, Mexico, 57% in the United States. If we look at GM, 52% United States, 30% Canada, Mexico, and then 18% others, and continues like this with Volkswagen, Kia, Honda, Toyota, Nissan as well. Now, what's important to note is that Tesla, yes, it's true, Tesla assembles their cars in the United States, but the cars, parts of the cars, are not always made in the United States. Important to note. Elon Musk even replied twice. So he says, one, to be clear, this will affect the price of parts in Tesla cars that come from other countries. The cost impact is not trivial. He then said also, important to know that Tesla is not unscaled. Here, the tariff impact on Tesla is still significant. So I'm bullish on Tesla, I'm a Tesla bull, but I want things to be clear. I don't like it when people lie on the, well, bearish side, and I don't like it when people portray everything as bullish, as if nothing bad is going to happen. No, this 100% thing here is a bit misleading. Let's be honest. It's assembled in the United States. All of the parts are not made in the United States. Just so we're clear. Also, on the FSD front, FSD launched in Austin in June, still on track. And Tesla AI tweeted out, collectively, the Tesla fleet has driven more than 3.6 billion miles on FSD, first beta, then supervised, 2.16 billion miles in 2024 alone. So of course, as more and more FSD enabled cars are on the road, that number is going to increase quite rapidly. And I believe Elon Musk said a couple of years ago that they need around 6 billion miles driven to be, well, approved worldwide for autonomous vehicles, full self-driving. So we are getting there. Moving on to a part of Tesla's business that is still doing extremely well. So we did touch on that, I think, a week or so ago. First, China made Tesla Megapack batteries on their way to big Australian storage project. Now, if you look at Tesla's market share for battery storage in Australia, they have 32.2% market share at the moment, and yeah, by far the leader. And this is the thing, remember, Tesla Energy, yes, today is still much smaller than the automotive side of the business, but it is a part of the business that is growing much faster than the automotive part of the business, that has higher margins than the automotive part of the business. And I don't know why people keep ignoring that part. Because yes, we are going to have a negative impact from the automotive side of the business. But we are going to have every single quarter a more positive impact from the energy side of the business, especially if you look at gross profit and then the profitability of that as well. So don't sleep on that. Moving on here, if we look at the maintenance and repair cost by brand in the first 5 years and in the next 5 years, number one here is Tesla. The total cost after 10 years is $5,050. And yes, I'm as surprised as you to see Lincoln as number 2 and Buick as number 3. This is a Buick and this is a Lincoln. So yes, the more you know, and now you know. So moving on here. Moving on to some UK ratings. So they did a little survey in the UK, and it turns out that if you look at best brands for reliability, Tesla ranks number 2, just behind Lexus and above Toyota. And if we look at the overall satisfaction rating, Tesla is now number 1. And this is not something from 2024, this is from 2025. Tesla is number 1 with a satisfaction index rating of 89.41%, Lexus number 2, 86.32%, and Porsche third, 84.79%. I am actually very surprised to see Porsche as number 3, because if we go back to the maintenance and repair cost, well, Porsche is almost all the way down here. Only Land Rover is more costly. So, I mean, okay, I guess there is that. Moving on to what has happened Friday. Well, my evening, suddenly X blew up. Well, Elon Musk said here xAI has acquired X in all-stock transaction. The combination values xAI at $80 billion. To me, that makes 0 sense. And X at $33 billion. That's $45 billion, less $12 billion of debt. I'm saying $80 billion doesn't make any sense because you know my opinion on privately held companies in the AI space, valuation-wise. I think that's where the huge bubble is. I don't think OpenAI is worth anything near $300+ billion. That would mean that it's worth around, well, more than 16% of Google Alphabet's valuation. Does that make any sense? I don't think so. I mean, if OpenAI is $320 billion, what does that make Gemini, right? What does that make the whole Google business? To me, it just doesn't make much sense. But okay, he continued by saying, since its founding 2 years ago, xAI has rapidly become one of the leading AI labs in the world, building models and data centers at unprecedented speed and scale. I agree. X is the digital town square where more than 600 million active users go to find the real-time source of ground truth, and in the last 2 years has been transformed into one of the most efficient companies in the world, positioning it to deliver scalable future growth. Quick note here, 600 million active users, no mention whether it's daily or monthly. xAI and X Future are intertwined. Today we are officially taking the step to combine the data, models, compute, distribution, and talent. I'll be very honest with you. I thought X and xAI were the same company, or at least like X was up here and xAI was just a subsidiary or something like that. It's, yeah, I don't know. It's quite strange to me, to be honest, because Grok, right? Grok was instantly in X. Grok probably trains on X data, so to me this was just strange. I was sure that X and xAI were basically the same company, just a subsidiary or something like that. But I guess I am stupid, but okay. This combination will unlock immense potential by blending xAI's advanced AI capability and expertise with X's massive reach. The combined company will deliver smarter, more meaningful experiences to billions of people while staying true to its core mission of seeking truth and advancing knowledge. This will allow us to build a platform that doesn't just reflect the world, but actively accelerates human progress. I would like to recognize the hardcore dedication of everyone at xAI and X that has brought us to this point. This is just the beginning. Well, my question here is 1. What is the end game here for xAI? What is the end game? Is it to become a personal assistant through standalone app, or maybe integrates itself into Tesla humanoid robot and Tesla cars? What's the end game? That's my question. What's the end game? Because Tesla itself has Cortex, their own huge data center, GPU clusters, whatnot. Tesla has Dojo. So my question with basically xAI/X now, what's the end game? First of all, I'm quite happy. Well, I'm happy-ish that this has happened, because this could also mean that Elon Musk does not need to sell Tesla shares to finance X further. Okay, there is that. Second of all, I will always say the same thing. I feel like I've been robbed a little bit. Elon had to sell quite a lot of Tesla shares in order to acquire X. Then xAI was born. In the meantime, why hasn't Tesla used its cash pile, which keeps on increasing every single quarter, to get a percent of these companies? I just don't get it. But okay. Anyways, going back to my question here, what's the end goal of this company? Is it to just make sure that the LLM becomes better and better? What are they going to do with that afterwards? That's my question. If you got an answer, let me know down in the comment section below. Then Tesla will open up in the Kingdom of Saudi Arabia. Yes, I think they could sell plenty of Cybertrucks in that country. I think they could sell plenty of Teslas in that country, but they'll also have to, build a whole supercharging network. Now remember, in 2034, Saudi Arabia will host the World Cup, which probably will be again in the winter, because in the summer it is unplayable there. Okay, now the decision behind that, yes, is again a big question mark, just like the last World Cup, but fine. Now, Tesla could have a huge opportunity here, because by 2034 could have huge fleets of Tesla in Saudi Arabia, autonomous fleets as well, and that could be a huge, transportation option for that event. Don't screw up that opportunity. Closing out with the chart right here, as you can see, last week was still a green candle. We did try to go and tackle that 200-day moving average at the start of the week. That wasn't really a success. We are now back under that uptrend line, but it's been two weekly green candles. RSI is also indicating a small rebound, but as you know, April 2nd, I think, is going to be a catalyst on the upside or the downside. Remains to be seen, but at least by then or after April 2nd, we will know all the things that we need to know with regards to tariffs, who, when, what, how. So yeah, that's about it. Do share your thoughts down in the comment section below, hit all the buttons, and I'll see you all in the next one. Bye bye.